Despite government apathy, investment in India's crypto industry continues. Welcome to the Daily Forkast April 25th, 2022. I'm Justin Solomon of Forkast, covering all things blockchain. Indian crypto exchange CoinDCX raised $135 million in its latest funding round, and in an exclusive interview, they gave us the lowdown on plans for the future and their outlook for the industry in the country. We'll take a look at that, plus a whole lot more coming up. Now let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
First up, a denial from the world's largest crypto exchange. Binance says a report from Reuters claiming that it is sharing client data with Russian authorities is not true. In a statement, Binance said suggestions that it shared any user data, including that of Russian opposition leader Alexei Navalny, with Russia's Federal Security Services, are categorically false. The statement came after Reuters reported that Binance head of Russia, Gleb Kostarev, met with a Russian intelligence unit last April and later consented to the agency's request to share client data. In a Facebook post, Kostarev also denied the allegations, calling it an absolute lie. Binance said it will be writing a formal complaint to Reuters under the publication's editorial code. As of Monday morning in Asia, Reuters had not issued any response on the matter. The exchange has made adjustments to its services in Russia based on the sanctions against the country after its invasion of Ukraine. The most recent is limiting services for Russians or users residing in Russia with crypto assets of over $11,000 to withdraw-only mode. And speaking of the war in Ukraine, why not sign up for Forkast.News to join our discussion on how the crisis will shape the age of crypto and decentralization. That's on May 12th. Over in China, authorities are pushing ahead with plans to showcase the digital yuan at September's Asian Games. Despite a high possibility of a delay, host city Hangzhou has made showing off the central bank's digital currency, or CBDC, a priority in the run-up to the games. Hangzhou is just 60 miles away from Shanghai, where mass lockdowns are in place amid the city's biggest wave of COVID cases since 2020. However, organizers say the venues are already ready, and officials say they will follow the successful experiences of the Beijing Winter Olympics in publishing a plan to deal with the COVID situation. In the meantime, a large-scale public test for the e-CNY has been planned despite Hangzhou not launching any giveaways of the digital yuan in lucky red packets to stoke public demand, as has been seen in other test cities. You can find those stories and more at Forkast.News. Staying on that theme, with more and more countries like China looking into launching a CBDC, we asked Paolo Arduino of crypto exchange Bitfinex what they mean for the future of stablecoins like Tether or USDC. Forkast Carolyn Wright reports.
Stablecoins are tokens backed by real-world assets, like the US dollar, and they have proven hugely popular as an on-ramp for investors looking for alternatives to traditional financial products, as volatility in their price is low compared to the wider crypto market. But with many central banks, like the People's Bank of China, making plans to issue CBDCs, are stablecoins facing a threat to their existence? Arduino doesn't think so.
One big misconception, I think, is that privately issued stablecoins like Tether USDT and CBDCs cannot coexist. I believe that they can easily coexist because it's a bit naive thinking that the Central European Bank will issue their CBDC, so their stablecoin, on Solana or on Ethereum. They will not. So CBDCs are a way for me to modernize the really old, expensive, slow banking system.
Arduino explains that CBDCs will massively reduce costs for banks, as well as allowing for much more efficient processing of transactions. But despite all these plans for CBDCs, in some emerging markets like Turkey, Venezuela or Brazil, where the national currency is devaluing quickly, stablecoins are seeing huge growth as they are being used to provide financial protection.
They are putting their savings in Tether because they feel like is their only protection against their national currency. And of course they put a portion also in general cryptocurrencies, but they also don't want to suffer too much of volatility. For them it's already a big win if they can protect themselves from the devaluation of the national currency.
And while crypto enthusiasts may think nearly everyone already owns one token or another, Arduino points out that the vast majority of people in the world don't understand what crypto is and are scared of getting on board. He says that whether we're talking about blockchain technology generally, a CBDC or a stablecoin, privacy and ease of use are key to mass adoption.
Normal people need to use tools that are effective for day-to-day life, that can be helpful. They need to bring their children to school, they need to buy groceries and so on. So it's all about bringing crypto to their life in the most seamless way.
For Forkast, I'm Carolyn Wright.
Over in India, CoinDCX's $135 million Series D fundraising has made it the most highly valued exchange in the South Asian country. Speaking with Forkast Pradipta Mukherjee, co-founder Sumit Gupta explained what that means for both CoinDCX and for India.
The much criticized new crypto tax law took effect in India this month, and one cryptocurrency exchange in the country is weathering the storm. Having raised $135 million in its Series D funding round, Sumit Gupta, the exchange's co-founder, told Forkast about CoinDCX's plans for the future.
A lot of effort will go into building a very strong team, all the way from engineering, product, compliance, business development, marketing growth across the board. So yes, with this round of funding, I think we'll be able to accelerate our mission to make Web3 accessible to masses.
Gupta says CoinDCX is now looking to grow its 400-strong workforce to cross the 1,000 mark by the end of this year. The company has also mapped its plan for addressing the uncertainty of India's stand on crypto.
We are already the most compliant platform in the country. We even though regulations are not there in the space, we are self-regulated and we follow all the norms in terms of AML, KYC. We have a very stringent KYC process, and we make sure that we follow whatever compliance practices that a traditional fintech business follows in the absence of regulations, and we'll continue to double down on that, invest a lot more in that area.
India imposed a 30% tax on all gains made from cryptocurrencies on April 1st, while a 1% tax deducted at source on all transactions starts July 1st. However, Gupta shared that CoinDCX has not seen a major dip in business since the law took effect. And although this might not be a popular sentiment, he thinks positively of this development.
We have seen significant improvement in terms of the understanding within the government. Now there are tax laws, right? And I think 2 years back we were talking about PAN. Now we have tax that we have defined the VDA, what is a virtual digital asset. So if we just extrapolate it, I think the way forward is quite promising, and I believe that India will regulate crypto. Of course, it's not an easy thing to do. It will take its own time, and there are a lot of work that needs to be done, right, in terms of coming up with the right policies and frameworks that suits as per the Indian needs, and a lot of global cooperation is also required.
So, will the high taxation rates kill crypto in the country? Gupta doesn't think so. For Forkast, I am Pradipta Mukherjee, Kolkata, India.
And that's the Daily Forkast. And if you want a deeper dive on these stories, the Daily Forkast is now also a newsletter. It can be delivered straight to your inbox. Sign up at Forkast.News/newsletter. Thanks for watching. I'm Forkast Justin Solomon. Until next time.